This is the FCTO Daily Forex News Report for the 22nd of April 2013. The Japanese yen weakened broadly as the week started in reaction to the G20 meeting, where Japan avoided criticism of its policies, which have drastically weakened the yen. The Bank of Japan governor commented that winning international understanding gives me more confidence to conduct monetary policy appropriately. He pledged to continue the qualitative and quantitative easing for the next 2 years. The G20 statement acknowledged that Japan's recent policy actions are intended to stop deflation and support domestic demand. US dollar Japanese yen is heading back close to the 100 psychological level, but would be cautious on a pullback from there. G20 leaders also noted in the communiqué that global recovery remains uneven and is progressing at different speeds. They pledged further actions to raise growth and create jobs. Regarding currency markets, they reiterated their pledge to refrain from competitive devaluation and all forms of protectionism. They stated monetary policy should be directed towards domestic price stability and continue to support domestic economic recovery according to the respective mandates of central banks, though it warned of unintended negative side effects stemming from extended periods of monetary easing. Sterling opened the week a bit weaker against the euro, with last week Fitch downgrading the UK's credit rating to AA+ from AAA with a stable outlook. Fitch noted that despite the UK's strong fiscal financing flexibility, underpinned by its own currency with reserve currency status and the long average maturity of public debt, the fiscal space to absorb further adverse economic and financial shocks is no longer consistent with a AAA rating. Nonetheless, Fitch still affirmed that the UK has an extremely strong credit profile. It's reported that the Chancellor of Exchequer Osborne will extend the Bank of England funding for lending scheme this week to encourage loans to small businesses and consumers. Outgoing Bank of Canada Governor Carney said that the economy needs to grow above the potential rate of 2% before raising interest rates. Also, there needs to be a positive evolution of household debt and aspects of the housing market. Meanwhile, inflation needs to be picking up a little bit before the move. Carney will become Bank of England governor later in the year, and he said that European leaders have to do a lot on the structural side in reforming the financial system and fixing their finances and fixing their banks over a number of years. New York Fed President Dudley speaks this afternoon, and given the weakness in recent US economic data, his comments could prove interesting. In general, Federal Open Market Committee members have softened their rhetoric on scaling back the quantitative easing program recently. Also, keep an eye on earning releases, with Caterpillar and Texas Instruments reporting today, as disappointing earnings results were an important factor behind the risk-off move in US equities and the downward pressure on US rates. In terms of economic data, we expect US existing home sales to show a 2% month-on-month increase in March. Data on euro area government debt for 2012 is due for release this morning. Finally, European Central Banks Corre and Noye speak today. Whilst the speeches are not about monetary policy, the Q&As might offer some interesting remarks. For all the news affecting the Forex market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.